Happy Thursday, everyone. Futures Brizio here, 2:30 on Thursday, May 14th, 2026. Hope everybody's doing fantastic. Hope you've had a great week. The last video I made last week on Friday, I did tell you I was going to be away a few days this week, so I was. I just got back yesterday afternoon. And per usual, unfortunately, about the last 3 times I've traveled, I always pick up some crud. So I probably sound a little nasally and congested because I am. So it's really annoying because literally it's been like the last 3 times. But I'm muscling through it. I don't feel bad. I just don't sound all that great, but hopefully it doesn't come through too much here on the video. But before we get started, as always, make sure you smash that like button, subscribe to the channel. Off to the side down in the corner, you should see a little red button on the screen for subscribe, or you can obviously drop below the video, hit subscribe, ring that bell notification so you get notified when I post new content. And any comments, questions, leave them down below. All right, so we'll just jump right in here. Shouldn't make this too long, but basically just continuing to discuss the currency strength indicator and how I use it to trade. Now, I've talked about different time frames to use. And look, this can really be customized to whatever you want to do, depending which market. Now, because this is a 2-line indicator, you need to be able to use it where you're comparing one asset against another where it makes sense. So Forex pairs are prime for this type of indicator. And so that's 90% of what I use this for is for Forex. The other 10% I use it for is for currency futures, not Forex, spot Forex, like traditional Forex like you see over here, but spot futures, such as like you see here, this is the Euro, Pound, Aussie, New Zealand, Swiss, Japanese yen, and Canadian dollar. And basically for these, the orange line is always going to be the currency future. So in this case, the euro is this orange line. The blue line is on all of these, for these 6 is going to be the DXY. You can't trade the DXY as a market, but these are all that, but that's the dollar index. So basically I have these all pitted against the DXY, which is the dollar index. Okay. So that's how I read this. For Forex, it's basically the orange line is always going to be the first currency in the Forex pair. So in this case, the orange line is the euro and the US dollar is the blue line, okay? And basically, not to rehash this, but if anybody just listened to the first time, this indicator is a custom indicator. It's based on a free indicator that somebody else created on TradingView, open source indicator where they had like all the currencies, all 8 of the major currencies plotted on one indicator. And it's just too busy to read and just not really useful, in my opinion, the way it was. Although I like the concept. So I found somebody who's a TradingView editing whiz, gave him this indicator and said, create me a custom indicator based on this that allows me to just see the asset I'm looking at rather than all 8. So whenever I change the currency pair, again, it's always going to show the orange line is always going to be the first currency in the pair, and the blue line will be the second currency in the pair. So I can go through there, and this indicator will update for every currency pair, and I don't have to look at a big mishmash of all 8 currencies plotted on one and try to figure out what the heck's going on. Okay, so it's pretty simple. The only other customizable on there is what you call the look back period. You can see the top left corner where my pointer is. I currently have the look back period set at 10. So again, that's just 10 whatever time frame. So if it's a 1-hour chart, you're looking back 10 hours. If you're on a daily chart, you're looking back 10 days, right? And you can set that to whatever you want. And I have talked on this channel about back testing many different well, not many, but 4 different look back periods, 7, 10, 14, and 21. And I had kind of settled on 14 as a good in between, but I also like the 10 too. And I think the 10 is a little bit more responsive, but again, you really can't go wrong. If you wanted to use the 10 or the 14 in particular, it really doesn't matter. It's going to be very minor differences. And the 7 again is going to be a little quicker. I find that's a little too noisy. And the 21 actually can give a lot of really great signals. It does quiet the indicator down, gives you less signals. But the drawback to that is the signals can be a little bit late because depending what the previous 21 period price action looked like, you could potentially get a late entry. And so when it gives a really on-time entry, they're beautiful and a nice smooth looking indicator. But I felt like it was giving too many late entries. So, and I don't want that. Obviously, you want to get in as soon as possible. So the two ways I use this again, and then we'll move on, is basically, and I'm going to go to the 4-hour chart because that's what we're going to talk today, is basically two ways. It's crossover. So right here, we have in this case is the euro dollar, the US dollar shooting up the blue line. At the same time, they cross over. And we have the orange line, which is the euro crossing down. We have pretty violent divergence away from each other at this point, which gets you in either at this candle or this candle, and you can see you'd be in a nice downtrend. Now, again, because this is a lagging indicator, and because you're on a 4-hour chart, it's not going to catch the exact top, although sometimes it will pick that top candle. And a lot of it just depends on the momentum of the move. And again, what the price action was leading up to this. It took a little bit to get this signal because, of course, the price action leading up to this bearish trend was up to maybe sideways. So depending what that look back, what the price action was doing prior to that signal is going to determine what type of entry you get, okay? So sometimes it's going to nail it right at the top. Other times it might be a couple of candles in. Okay. But if it's a good, strong signal, this is still a really excellent trade that you could still be in. If you took this, right? Let's say you got in at the close of this candle, you were still in it right now, you'd be up 90 pips already. Okay. And you just set it and forget it. Okay. So the other way I like to use it is trade re-entry. So basically when the two kind of bounce off of each other, kind of come together and bounce off for a trend continuation. This is an example right here. It's not a great one because the euro line kind of flattened, but it still went up. Where we had an uptrend going, right? We had this uptrend going. Then the indicator comes back together. They don't cross, but they kind of kiss each other and then deflect away. So right here at this point would be your re-entry. And that would have gotten you in right at the close of this candle, which was a great entry. And you could have traded it up to here. Okay, so those are the two ways I like to use it, either continuations or reversals. Okay, obviously the trend is your friend until it ends. So the continuation ones are really nice, but reversal ones are cool too. Just be careful on the reversal ones because sometimes the indicator is going to give you what looks like a reversal signal, and it does turn out to just be a pullback. But again, no system's perfect, no indicator's perfect. Whether you use any indicators or no indicators or whatever, it's not always going to work. Okay, you're going to take losses. That's just trading. So, so right now I'm using a look back period of 10. Okay. And I'm using the 4-hour chart in this case. I've talked a lot about using multi-time frame analysis, using like the daily or the weekly with a 4-hour entry. I've even tried experimenting with the 12-hour, the 10-hour, maybe just trading those solo without even looking any lower. So basically take the signal off the 10-hour or the 12-hour straight away. And you certainly can do that if you don't want to do multi-time frame. The one thing you have to be careful about, which if you think about it, makes sense. If you trade straight away off of, say, especially the 12-hour daily, weekly, you get a signal and you trade straight away on that. There is a fairly high likelihood that when you get into that trade, the price is going to pull back and you're probably going to go into a little drawdown because by the time you get the signal, these are lagging indicators, okay, because they're based on past price data. By the time you get that signal, that initial first part of that move is probably, starting to wind down. So I would advise to either go to a shorter time frame before you take the trade. That's why we talk about multi-time frame look. Say you get a signal on the daily chart. You could just take it straight away. As soon as you get the signal, daily candle closes, you jump in, put your stop loss in, and move on. But just be prepared for the fact that you might run into drawdown because that signal has probably happened a little bit into that first initial move. especially if it's a reversal signal. Okay, if it's a continuation signal, you might be fine, because if the trend's already strong in one direction, you're just hopping back in. That probably will work out better. But if it's a reversal, be prepared for potentially, even if the trade ends up working out, for some drawdown. Okay, so that's why a lot of times I talk about multi-time frame analysis. Get the signal 12-hour, daily, weekly, drop to like the 4-hour, and see what things look like there. Are you getting a signal on that time frame too, or do you want to wait for a pullback, wait for the 4-hour to give you that same signal once there's a pullback? Okay, so that's just simple, pullback entry, just getting in at a good price instead of just hopping in at any time. Okay, but you certainly can do whatever works for you in terms of risk. Just understand, again, the higher time frames, you're going to have bigger stop losses, potentially. Although, again, if I get into a trade on a daily chart, I may set my stop loss based on that daily chart too. But a lot of times I'm going to go down to a 4-hour, and I'll find a more reasonable place to put my stop loss that still will give me plenty of breathing room. But I'm not basing it off of a daily chart, which is going to give me a much wider stop loss. Okay, so you can use whatever time frame you want. However, I would advise not going below the 4-hour on Forex, just because of the volatility and the manipulation, the noise, whatever you want to call it. There's a lot less valuable information in shorter time frame candles. And so the 4-hour is as low as I would go. The other setting on this that you can set on this is to have it either be live. If you open the settings on this thing, to have it be live or not. Now, live just means that these lines update in real time. It doesn't wait for the candle to close. So that can be good or bad, right? If it's a 4-hour chart, and let's say it's starting to look like, a divergence. Let's say we go back to this signal. The 4-hour chart was starting to show before the candle closed that this was a short entry. And so you get in right away. Of course, that would have worked out. But there's always the risk that if you don't wait for the candle to close, you might get a signal, what you think is a valid signal, in the middle of that candle. And then by the time it closes, it's kind of reverted back to what it was before, and you get stuck in a bad trade, or drawdown. Okay. So again, it just depends. A lot of it depends on your risk tolerance, whether you want to wait for the candle to close, which is kind of the, how most people teach it, wait for the candle close. Or if you want to set the indicator to live, which means, again, it will update those lines in real time, even before the candle closes. And again, you could potentially get in at a better price, get into that move earlier, but there's always the risk with not letting it close that that turns out to be a false move. Okay, which of course makes sense, right? So, yeah. So if we look just in terms of trades, this one I took earlier on my funded account. It's on this 4-hour chart, and it was right here. Okay, this was today. The signal actually happened. The crossover actually was at 1 a.m., which I was not on for that, but I was up around 6 o'clock this morning, and I took it on that basically that 5 a.m. candle, because this one started at 1 a.m., so the next one would have started at 5 a.m. So I took it in there, so a little bit later, and I'm going to hold it. Now, you can see on this chart, we've got some pretty big support levels sitting here. But, so I do look at price action and market structure. And you can see we were trending up right here. We're making some nice swing highs, swing lows. And we got up here, and we kind of have been moving sideways since, let's see, this is May 6th. So this was a week ago. We hit these highs, and we have not been able to trade through it since. So I took this short. We'll see what happens. If it doesn't break this support level, by tomorrow, I'm probably not going to hold this into the weekend. But I will hold it unless, of course, I get stopped out in the meantime. But you can see, it's respecting this support level. That's why it's having trouble getting through here. So it's in profit because I got into it over here. But you can see it's a pretty small profit at the moment. And that's just the way it goes. And I'm fully aware of the support level right here. If we want to go to the daily chart, we are at daily highs here. Here's the weekly chart. I mean, we're not at all-time highs, certainly. And we do have another major area of resistance on the weekly chart. That's still quite a ways away. This would probably take at least a couple more weeks even to get up to these old support resistance levels that go back 4 years ago. So, I mean, this is 4 years in the past. I don't know how viable these levels are. But if you're targeting areas to potentially take profit, that's one area where you might want to look for, because it's a self-fulfilling prophecy. Traders will zoom out and look for areas where they can put in take profit levels, or maybe even try to sell from in this case. And this makes sense, right? This is the next kind of major level sitting up here. Okay. So I'm not saying that this could not go up more. There certainly is more room to the upside on the higher time frames, but it looks like it's been struggling here for the last week or so, and so maybe we'll get a little deeper break, and then I'll look at just targeting some of these other swing areas like here, or this one's another major low down here. So we'll see how that works out. But that's why I took this trade. Okay, and then just looking at a couple of other pairs here. Oh, okay, so here's a nice deflection trade, and I did not take this. I wish I did, because I already have 2 Canadian dollar trades open. I just didn't want any more risk, but I wish I took this. Right here. So this was today. This was again at 1 o'clock, and then we got continuation at the 5 a.m. candle. So I could have taken this morning, the same time I took that Aussie dollar trade. And you can see right here. Now, they didn't come right together and touch. That's ideal. But you can see they came pretty close and started diverting away. And, this is where your live setting would have helped you, because on the live setting in this candle, because you can see on the actual move down, well, the actual move down, actually, the signal, the initial divergence actually came on this blue candle, which would have been a perfect entry if you had gotten in here. But even if it started to go on this big bearish candle, if you had waited for this candle to close, you can see, you missed a lot of the move. Now, this probably will go a lot further, but on the live, I bet you I'd have to go back and maybe replay it. But even if, let's say you missed this entry and you go to this one, if you have the indicator set to live, it would have showed that divergence going on right in the middle, and you could have gotten in on this candle before it shot all the way down here, because you can see it did end up closing near the lows, and then you'd still be in it now. So that's a place where the live, and I mentioned before that the live signals on a continuation trade are generally going to be more reliable, or will have, I shouldn't say more reliable, less risk than a reversal. In this case, kind of a continuation trade, because the market was starting to trade down, and this was a perfect entry. Okay. Probably about a 90% entry, because they didn't come together completely, but still, if in real time, when you saw this with the live setting on, you would have said, oh boy, this is a low risk entry. You could have gotten in anywhere up here around this area. Put your stop loss, about where this alert is, maybe somewhere up here, and just let it run. I'm going to take this alert off. No need to have that now. Take this one off too. No need to have that one on the chart anymore. And there you go. Okay. So again, this is what a 10-day look back period, or 10 period look back, which in this case will be 10 4-hour candles. So 40 hours of look back. And on the 4-hour chart. Okay. Just kind of randomly click through. I can tell you, Forex pairs, I don't know, a lot of them have been very quiet. I think the Canadian dollar is still seeing some strength. Oil prices are still high. We still have the Middle East situation going on. So, as long as oil prices stay elevated, the Canadian dollar is going to continue to have some strength. Here's another deflection continuation trade. New Zealand US dollar short right here. Again, not perfect. They didn't come together, but this is another one where the live setting would have helped you. You would have gotten in at this candle if you were on the charts. Again, this was at 1 a.m. I was not, but say I was, or I got on in this candle right here, which would be more realistic, and then you'd still be in the trade profitably right now. Okay. So the 4 hours are nice in between. And the good thing about the 4 hour chart is you don't have to go, look at the 4 hour and then go down to a 1 hour for confirmation. And not in my opinion, not for this indicator and this strategy, because the 4 hour is a low enough time frame. It's high enough where it'll still have some decent filtering. It's not going to give you a ton of signals, but it's low enough where I don't think you need to go to like a 15-minute or even a 1 hour for confirmation. I don't think that's necessary, and you're not going to really get it anyways. Okay. So that's why I like the 4 hour. It's a good swing trading time frame. And now, if you want to look at the higher time frames, I absolutely recommend going up to the daily. Even if you take whether you take the trade straight away on the 4 hour and then go look at the daily for like take profit areas. But you might want to take a peek at the daily or the weekly even before you hit buy or sell, just to make sure you're seeing the bigger picture and that you're not buying or selling into a major area of support or resistance on the higher time frame that you cannot see on the 4 hour. Okay. Always good just to take that one little look and make sure you're not like selling into a floor or buying into a ceiling overhead, right? Where price is going to, those higher time frame levels mean a lot more. And it doesn't mean the price won't eventually break through them, but there's going to be a reaction. And if you're selling right into a support level from a high time frame or buying into a resistance area on a high time frame, expect that you're going to at least have some substantial drawdown as the market reflects that area, because people are going to be looking to take profit from those areas that were already in trades. And it's just a natural area. It's a self-fulfilling prophecy. Everybody sees those levels just like you do. Okay. So just keep that in mind. But again, in terms of taking the trade, you can do your analysis and take the trade right straight away from the 4 hour. Just, take a peek at the higher time frame just to make sure of where you're at in the bigger picture. And I'm sorry about my voice, guys. So here is something potential trade setting up actually right now. This is the Aussie Canadian. Again, the Canadian dollar is strengthening. Now you can see real time. I have the live set on. Literally right when I said that, the Aussie dollar line was pointing down, and then a second later it popped up. Okay. So again, this is why the live setting can be interesting and challenging. And again, this is a reversal trade. So, maybe this is one where you want the candle to close, because this is not a continuation trade. It doesn't look like this signal right now as it stands is a reversal signal. Now, it doesn't mean that this line couldn't just bend right back down while I'm talking, but this is set live, and so it does vary as we go here. But this is a potential short setup. And do I have that on my list? Yes, I do. Aussie CAD, yes. Sorry, I'm just looking at my journal. Okay. So there's another example, real time right now while we sit here, of a potential short. Now, again, the market's been going up. So again, might be worth waiting for the candle to close to make sure this is not just a corrective move. You get in short, and then next candle, you get a big bullish engulfing candle, and you're like, oh shit, So we go to the higher time frame. Here's the daily chart. Certainly, we're still in an uptrend, although it does look like we've put in a short-term high up here. 2 daily candles not being able to break higher. So, a nice pullback on a daily trend is certainly a valid signal. In this case, for a short on the 4 hour, right? Here's a nice, speaking of that, now this is on the daily, but here is a nice continuation trade right here. You can see the market was going up, and then we have the two lines come together right here where my pointer is, right? Perfect. They kiss each other and then deflect away. Your entry would have been basically right here on this little candle right here, right? You can see the rejection off of liquidity. Get in anywhere in here. Technically, the crossover, the bounce actually started on this bear candle, but even if you miss that and you get this one, now it's definitely confirmed. And look at that going straight up. Okay, so that's why, like I said, you can do this on any time frame. If you don't want to spend a lot of time looking at charts, just pick the daily or the weekly or the 12-hour, and you've only got to look at the charts once a week, once a day, a couple of times a day, right? If you look at the 4-hour, then you're going to have to, you're going to have opportunities to look more often. You don't have to, but you theoretically have, 6 times a day you can look at your charts because there's 6 4-hour candles. But it doesn't mean you have to. Doesn't mean you have to, because you got to sleep sometime, and there's better times to trade in this market than others. So, but there are 6 candles a day that paint. All right, so I'm not going to sit here and go through every pair. You get the point. I'll just pick a couple of the random ones. Here's another continuation trade. There's nothing right now. This is the Euro Aussie. See, they're nowhere near, so there's no signal here as far as I'm concerned. But here's a nice continuation trade. This was back on Tuesday of this week, right here, right? They come together, bounce off of each other, and then we got another move down. We were in a nice solid downtrend. This was at 9 a.m. on Tuesday. Unfortunately, I was not available. I was tied up all day Tuesday from about 7 a.m. for the whole day. So I missed this. Kind of a bummer. But that's why I was traveling. Tuesday was my busy day. I took no trades during the day on Tuesday. And so that's that one. I guess we look at a yen pair or two. The yen's been really okay. So here's a potential buy signal on the Aussie yen. I'm just picking ones randomly here. And this maybe is a buy signal on the Aussie yen. You can see we've got a nice deflection. This actually just happened this morning. And then we're right here at the current candle that opened at 1 o'clock this afternoon. So about 2 hours ago. And we a potential rejection of off of this level, liquidity down here, right? Price trending up. Price tries to go down. You get this little doji candle, right? And then, or not a doji, but like, what do they call this? Morning star? I don't know. I don't know all those candle names, but you get, it's one of those candles that kind of taps liquidity, sucks in people to go short, and then traps them right here. And this is potentially a buy signal. And again, we're live right now in this candle, so it's currently showing this as a valid buy signal. So that is also on my list. I had it as neutral before, but now we'll move it to long. And I may actually even take that and just see. Now, if I did take this, I can tell you I would not be putting my stop below this candle. I'd probably put it down below this next one because during the changeover from New York to Asia, would not be surprised to see a big liquidity spreads, thin out, and then you go down and you get tapped out. They go down and nail this area again and stop you out. I would put it a little further down. And then, if the trade starts going into profit and the volatility, that, changeover volatility wears down, the spreads start to shrink back to normal and price starts to move in my direction, then I would just move it back up at that point. And, then I would move it back to a more reasonable area. So that is a potential opportunity. Okay. And well, let's look at the Kiwi yen since it's a similar market. We don't really quite have that on the Kiwi yen. There's really no good signal here right now. So Euro yen, we did have a sell signal here, but not looking particularly good. So nothing really there. Swiss yen, all the yen pairs you can see, these are just not looking great, any of them. The only one that actually has any kind of a decent signal right now is this Aussie yen. Let's look at CAD yen. CAD yen actually has a nice buy signal here, but this price action is just so ugly. I mean, look at this. I don't even know what the hell this is. I mean, you had this big move down, and then we just chop, chop, chop. And this all has to do with the the war in Iran and everything in the Middle East. That's what all this is with the yen, and some bank manipulation by the Bank of Japan. And the U.S. dollar yen also had not a great, but actually a bullish signal here. They didn't really come together, but we've had a deflection here, and then it looks like price trying to bounce higher. Just this price action is just not great. So some of these look bearish, some of them look bullish. Doesn't mean they couldn't all be different. It depends what's driving it. If it's the yen, they should all look the same. If it's the other currencies, then it could vary. So, but this Aussie yen is probably the cleanest of all these. If it wants to go higher, take a peek at the higher time frame. Yeah, I mean the daily chart. This doesn't really thrill me too much. We're sitting at a double top here on the daily. Go out to the weekly. Certainly, there's really nothing to look at to the right. So certainly the weekly could keep going higher. There's no levels right above there to look at. So here we are back on the 4-hour. And you can see, here's our signal right here. So you could go long on this. Again, I'd put my stop loss probably under this candle. And just because of the liquidity, if I was going to take the trade anytime between now and 5 o'clock, it's kind of late in the afternoon to take any trades. But if you were going to take it now at 5 o'clock when the Asian changeover happens, spreads really widen, and you never know what can happen. I would be a little more generous with my stop loss in this case. So, so yeah, so that's what we got. And yep. So probably going to leave it there, guys. So again, if you have any interest in this indicator, again, I do not sell it. I don't sell anything on this channel. I've put it out there though. If you're interested, I can always connect you with the person who developed this for me, and I'll give you contact information. You can always reach out to him, talk to him about it, and go from there. Okay. But again, it's a CSI country strength indicator, 10-period look back, currently using it on the 4-hour chart. But the beautiful thing about this is you can use it on any time frame, although again, I don't recommend anything under the 4-hour. But you can swing trade it on the 4-hour. I've tried it all, 10-hour, 12-hour, daily, weekly. I've used multiple time frames, so you can really customize this and make your own. But the bottom line, the way you use it is not going to change no matter what time frame you use. It's just going to be a matter of how often you need to look at the chart, and how often you'll be opening trades based on the time frame that you're trading off of. So, so again, I'm going to leave it there because my voice is starting to fade. I hope it was helpful, and I will be back tomorrow, and then be back next week. I'll be around for most of next week. I'm actually going on vacation, a little bit more extended, next Friday. So I'll be gone from next Friday, the 22nd, through the following week, which is going to be a holiday week in the U.S. anyway. So market's going to be slow. It's Memorial Day weekend. So markets the following week on that Monday, the 26th or whatever that is, are going to be really slow. Well, they'll be closed pretty much that day. And it'll be a slow week. It's kind of the kickoff to summer. And it's a big holiday week, especially here in the U.S. So I'm not going to be really missing too much while I'm away. I will have my computer, but I'm not anticipating I'll be taking a lot of trades that week, just because I'll be on vacay and because, again, the markets probably will be slow, especially early in the week. But in the meantime, between now and then, I will be around, and we'll keep going. So make sure you smash that like button, subscribe to the channel. And again, any questions or comments, make sure you leave them down below. And I hope everybody has a great rest of the afternoon, and I'll talk to you all soon.